Thanks so much, Steve.
You're welcome.
So we'll dive into the cyber investing panel. I think we'll just kind of go down the line and introduce ourselves and just jump into the questions.
Sure.
I'll be moderating. I'm Siobhan Gorman. I'm a director with the Brunswick Group. I co-lead our cybersecurity and privacy practice. We're a communications consulting firm. Prior to that, I spent 17 years in journalism where I was covering cybersecurity issues and national security issues for the Wall Street Journal and other newspapers. And we can just kind of go down and then dive in.
Sure, yeah. I'm Talpaz. I run the cybersecurity research practice at Stifel. Hopefully most of you know it, decent-sized investment bank based out of the hyper-growth city of St. Louis and Baltimore. So a lot happening there. I've been in cybersecurity for about 3 years. I started covering SaaS about 7 years ago, made a big push internally when the space started kind of shifting a few years back, and it's been an interesting ride, a lot of highs, certainly some lows, but it's a fun space, and we try to take a very deep fundamental approach. We cover a lot of public companies, but also a lot of private ones too, and I try to go as deep as I can into the space, really take a unique approach. So cybersecurity is all I cover when it comes to research.
Thank you. My name is Shaul Eyal. I'm a managing director, equity research at Oppenheimer. We cover the infrastructure software arena, under which we also cover the cybersecurity. My team and I cover all in all 20 companies, many of which we're going to probably talk about and mention as the day progresses. Been around for the past 15, 16 years. We have seen the ups, the downs. We had seen the absolutely staggering emergence over the course of the past few years of the cybersecurity universe as a whole, and I'm certain we're going to touch about it again in the next few hours. Happy to be here.
You've already heard from me, so.
Wonderful. Well, thanks so much. I think we'll just sort of start out with a pretty straightforward question. How much growth are you expecting to see in cybersecurity spending over the next, few years? You want to start with Gur?
Sure, yeah. I think if you look at Gartner numbers, you're talking about roughly 10% growth per year, but I think that's, to me, a bit misconstrued. I think what you're going to find is certain vendors, certain sectors benefit more than others. So what you'll find, for example, is consulting, MSSP growing at a faster clip at about 14, 15%. Other clips like secure web gateway, secure email gateway growing in the low single digits as they ultimately either get commoditized or taken in by another sort of group. So for example, you've seen the firewall consolidate a lot of sectors, IPS being probably the most prominent one, where it was a $2 billion market, now it's less than $1 billion or right thereabouts, as you've incorporated that feature into the firewall. So I think you could say 10%, but what you're going to find more specifically in the space is certain companies growing faster, certain companies growing slower, as one takes more share than the other. And you've seen that pretty prominently. So you look at the firewall space, for example, and you see Palo Alto growing at 60%. Meanwhile, Checkpoint's going to grow about 2 or 3% next quarter on license. That's an example of sort of what's happening in the space.
Absolutely. I'll build on that a little bit. I know Steve mentioned some digit in his opening remarks. I think from a bird's eye view, we are also of the opinion by 2019, the industry as a whole will represent probably about 116, 117 billion opportunity under the various silos that Gur just mentioned. When you start looking into the various buckets, obviously the numbers range anywhere between low single-digit percentage all the way up to about 10, 14% over the course of the next 3 years. But I think 116, 117, without a doubt, a good figure to stick to. I would also add that when you go and look back at some of the numbers suggested by the IDCs, the Gartners, as Steve mentioned in his opening remarks, you could see actually one of the things that at least draw us to this industry is the fact that this is, unlike some other tech-related categories, this is actually an industry that has been showing little acceleration when we go back to 2014, even 2015. So I think it represents also some of the industry developments that we had seen over the course of the past few years.
So to touch on a couple of markets, there are some, I guess, what you would call anomalies, some sectors within cyber that are growing much faster than others. The cloud security space is growing at about a 50% clip right now. That's a compound annual growth. Mobile security, that's another fast growth sector. That's going to grow by 5-fold over the next 5 years. But I think a lot of the growth in the industry, or the lack of growth, ties back to the labor pool or the lack of a labor pool. Companies have been talking about security analytics. We've seen a lot of VC money flowing into analytics. I'm very bullish on what that can do for corporations. But you're not seeing that market really taking off simply because there's not enough analysts. There's not enough people who could sit behind those tools. So the market's growing, but some of it definitely ties back to people, whereas other markets tie back to trends. So for instance, mobile. Last year, for the first year ever in the US, mobile traffic exceeded PC traffic on the web. So you've got a big trend there. The MSSP market, now that would be one that ties back to employment. Companies are spending a lot of money to outsource security, not because it's the better or worse thing to do, but because they just don't have the staffing. So I think some of that will start to level out, over the next 5 years as hopefully the industry figures out how to bring more cyber workers in.
I'm going to politely contest that point on analytics, actually. I think what you're finding, actually, certain companies growing faster in analytics. And I think what you're seeing is the evolution of the SEM market. So SEM is security, information, and events management. These guys like ArcSight and others that used to just basically just collect log data and events, but now have evolved into actionable intelligence. You see guys like Alien Vault and Logarithm, which is sponsored here. And what they do is not just collect data, but they provide actionable intelligence by correlating that against threat data. And so instead of getting 10,000 alerts, you then get the 5 or the 10 alerts that are actually most relevant to you because they've got actionable intelligence with them. So analytics is a growing space. You're seeing companies actually make a lot of money in that market. But to do so, it's not just to provide a dashboard. It's to provide something that's actionable with real insight that actually makes an analyst's life easier, not harder. And there's specific companies you've seen in the space that are actually demonstrating real growth in that market. It's sort of serving as a unification element in the security stack.
I'm sorry. You definitely make very good points. I think at the end of the day, for me, a lot of it doesn't come down necessarily to opinion, but really, just the numbers. So if you look at security analytics, that term, that acronym, was introduced into the market about 6 years ago. You might say a little bit, longer. That market right now is about a $2 billion market. It's basically a small market, and it's forecast to grow to maybe $7 billion. So that's a lot of growth over the next 5 years if we actually see that. On the other hand, if you take a look at IoT security, people have been talking about that seriously for maybe half the time, and yet that market's growing much more quickly right now. That market's forecast by numerous analysts to reach $30 billion over the next 5 years.
So what
right, because it doesn't require staff. It just requires embedded devices and security baked into products that are coming out on the market.
So that makes sense that certain parts of the market are obviously growing faster than others. I mean, what are each of your sort of nominations for the fastest growing component of this marketplace right now?
I would say that, I think without a doubt on analytics, security-related analytics is going to be a fast-growing category. I would also add, just as a side note, for those of us who have kids who are about to go to college, send your kids to become data scientists. We actually wrote about it because it's going to be in high demand in coming years. DLP is making a little bit of a comeback.
Public cloud.
Yeah. Endpoint, IoT, without a doubt. I think we touched on kind of most of it, absolutely.
I think orchestration is becoming quickly a very, very big segment. And the reason is that what you've seen is companies adopt 30, 40, 50 different solutions that don't talk to each other, that operate in silos. And that's what really puts the increased burden on the security analyst. And you've got to manage a new device, another solution that throws off a lot of noise and requires a certain level of expertise. Something that comes in over the top and is able to sort of bring all that together. A solution like a Forescout, for example, but there are certainly many others that look to orchestrate and develop policies and automation. You're seeing a lot of growth in that market and also a lot of funding, for very good reason, because it talks to the point of not having enough people, right? So if you can't hire more people, if that's a given, what can you do to augment your existing infrastructure? You can go to the MSSP space, or you can also augment it by bringing in an orchestration solution. So it's the reason why a company like FireEye bought a solution like Invotos to help orchestrate what's happening in the network stack. It's a very, very important part of the space, and one I think it's going to grow very quickly.
Gert, you also mentioned consolidation.
Sure.
And that, that's sort of the other end of the spectrum. But I'm wondering sort of what you all think about elements of this sector that you would expect to see more consolidation in, what's becoming commoditized, or what other factors are driving that.
Yeah, I think you will see some consolidation. I think, for example, you look at the CASB market, the cloud access security brokerage market, certainly a fast-growing market, but 20, 30 vendors right now in that space, all roughly interchangeable. There's too much noise. There's too much happening with guys like SkyHigh, Cypher Cloud, Adalom that got bought by Microsoft. I mean, the list goes on and on. So what you're going to find there is that these companies who actually need money and are trying to go back to the VCs and maybe do an up round, the VCs aren't as willing to fund you. And so what's happening now is that you have two choices. You can try to negotiate a down round, like a solution like a Bromium did a few weeks back with Silver Lake, or you can sell yourself or strip your costs out. I think what you're going to find is that a lot of these solutions, especially ones that are more feature and less platform, get consolidated. And I think that's an important point of differentiation, is to understand what's a feature and what's a platform in this space. Everybody's going to tell you they're a platform. Very few things are actually platforms in security.
Absolutely. I will also build on top of Gur's comments. I think also trying to understand how customers are looking at it. You go into any other bank, any other healthcare company, when you go into their IT rooms, there are dozens, at times even hundreds of various solutions out there. It talks also a little bit about Gur's comment about orchestration and automation, without a doubt, and the need to do something with that. But as it touches on vendor consolidation, we're beginning to hear and see that, number one, some of those IT administrators, they're just having a headache trying to navigate between those many dozens and hundreds of solutions. That's, I think, number one. Number two, obviously the cost also comes into play here. So now they got to juggle between, I wouldn't say shrinking budgets, but they got to be slightly more sensitive with every dollar going out of the firm. So I think also from a consolidation perspective, vendor consolidation, i.e., we're going to see probably some of the publicly traded companies on the one hand, and maybe a number of privately held companies as well, benefiting from that. And at the same time, to Gur's point, at least in my humble opinion, over the course of the next 2 years, there's going to be a little bit of a graveyard to some of those private companies that will be unable to make it to the public or to get sold down the road.
I think we're very early on in consolidation right now. As a barometer, I would look at the world's largest security companies. Now, that doesn't necessarily mean pure play companies. It just means companies by revenue who are in security. So as an example, IBM's a consolidator. IBM has a $2 billion cyber business right now. It was $1.5 billion last year. It was $1 billion a year prior. They've been acquiring companies, so they're an acquirer. Cisco is another acquirer. If you read the news, then you know who they've acquired. There's been quite a few big acquisitions, but then you have companies who are divesting themselves of security. HP broke itself into two companies. Cyber's hot. You would think that's going to be a big market for them, and they sold off a $300 million very hot network security business to Trend Micro. And on that side of the fence, then you have FireEye, and you have some larger pure play companies. So I think there's a lot of speculation. I think what we know is there's going to be a lot of activity. The numbers speak to the activity, but who is going to consolidate? That's questionable right now. I think Symantec's going to be a player. They have about $5 billion in cash. They dumped their storage business to focus exclusively on security. They've come out very loudly, and they've said, we're looking at acquisition targets.
So I think one thing that's important to understand in security is that in security you're dealing with a human adversary, which means that your solution has to evolve. It can't just operate in a silo, and it can't operate statically. That's an important point, because I think if you look at the history of consolidation in the space, it hasn't always been a home run, to your point. So for example, you look at HP, right, which bought ArcSight and Fortify. ArcSight is a massive share donor to a lot of companies right now. Fortify has been so-so. Cisco's had a mixed reputation in security as well. IBM's done better, but the point is that you can't just buy something and expect it to operate cleanly for the next 5 years. You have to continue to invest in it, maintain retain your people. And what ends up happening a lot of times is that there's a cultural shift, and so people start leaving, and the solution starts degrading pretty quickly, and people start looking for alternatives. Intel's a great example of that. Intel's a great company, but look at McAfee right now. They're sunsetting businesses left and right. They exited the VM business. They're probably going to exit endpoint at some point in the next few years. They've exited email security, and even though it's an $80 million business. So the point is that you can't just buy something and have it operate in that fashion for the next 20, 30 years. It has to continue to evolve, and that requires a sort of a cultural shift, if you will. To the point on Symantec, I think they'll try to buy something, but again, it's sort of the same point that if you buy something, I can tell you right now that any person I talk to at a hot company, they're not looking to go work for Symantec. So if they get bought out, that's a payday for 6 months, and then they're gone once once their contract expires. And that's a big issue for a lot of these consolidators out there who have the capital, but also fully understand that maybe they don't have the culture to absorb a fast-growing security company.
I think that's, continue.
Just probably to add on top of that, maybe from a bird's eye view as it relates to cybersecurity M&A, going back and reflecting, give or take 10 years or so, we didn't have any mega blockbuster type of acquisition on the security front. Probably we had McAfee back in 2010 by Intel, as Gur indicated. We had ArcSight, but those names, ArcSight went for about, I think, $1.5 billion or so. We had probably the most recent one back in 2013, just 3 years ago, Cisco, SourceFire, $2.2 billion. We never had anything like, probably we will never have, for now at least in the near future, anything like a Dell EMC, which I gotta say is an outlier by itself from a technology perspective. So at least the way we look at it, for the next 2 years, I would imagine we will continue and see the modus operandi of these companies probably slightly focusing more on tuck-in related acquisition. In that context, as you mentioned, Microsoft going after Adalom, a couple of other smaller names, Checkpoint doing a couple of things in that respect, Palo Alto. But again, it's pretty much rather than, investing internally in, 20, 30 engineers to come up with another solution, be it a DLP, be it an identity and access management, let's just write, a small check and buy that group of engineers from a privately held company. Probably one final thing about it, from my perspective at least, is that those security M&As, they usually come in waves. You go back, ArcSight, 2010, same time, McAfee, 2010. It usually comes like, in a 6 months wave. We didn't have any significant wave over the course of the past, a year or so.
Well, Gur, I wanted to jump on one of your points that you made about the cultural integration, because I think that's a big one. I was just wondering what you or others on the panel think, sort of what your assessment is of FireEye and Mandiant, because that's sort of an interesting case study in that zone.
That's actually worked quite well. I mean, keep in mind, Dave DeWalt was the chairman of the board for Mandiant, and I think Mandiant's actually, sort of been the saving grace for FireEye, because if you look at FireEye before Mandiant, it was a company that had, a very, very strong sandbox, but people have caught up in a lot of ways. And yes, they're still better, but they were, 10x the cost. And so now what you've got is not just a diversified business, but a great lead gen as well. Because you think about, security, for a lot of people when they buy it is a theoretical spend, meaning I'm buying this as a defensive mechanism. For Mandiant and for other incident responders like Optiv, who's here as well, it's no longer a theoretical spend. You've lost something. You can actually measure it in tangible dollars. And so all of a sudden, the budget, the wallet gets much, much bigger, and you're also a lot more vulnerable. So if you're FireEye, you think about it, you're coming in when they're at their most vulnerable, and you can go and upsell them like crazy, which is why you've seen FireEye as a service, which is really just Mandiant as a service, move to over $100 million business in a 2-year time frame, because you can then go and target the customer when that sale becomes way less theoretical and way more realistic, and you come in as kind of the consoling arm. You have the blanket and the cocoa, and that works really, really well as an upsell.
Yeah, absolutely. I would say that probably as specifically on FireEye's and Mandiant case, leaving aside the valuation and the $1 billion that was paid for Mandiant, which I think reflected about a 10 times revenue multiple, give or take. Yeah. I would say that initially was probably there was some issue understanding the shift to this hybrid model, product and services / consulting. And I think also it clearly got reflected in the share price, going from 80 all the way down to 11 just back in February, now recovering back to the high teens. So I think that we had some dimensions of that. I think in addition also, again, reflecting on M&As, I think that the common view is that M&As, usually, and again, big M&As usually do not seem to work. Just the way we look at things is that, if the executives of the acquired company are the talents, and you both mentioned that, tend to stay on board, I think there's probably a good chance that it'll happen. Probably in that context and on that point, I will mention probably two cases in which it appears to be heading in the right direction. The first one is actually when EMC back in 2005 bought RSA. 1.2 billion acquisition, it was small. One of the very clever things that Tucci, EMC's chairman, CEO at that time has done, he left the RSA people to their devices. And again, they have done a great job in that respect. Second, probably example would be the Cisco and SourceFire acquisition. For those of us who have been following Cisco's security practice, actually over the course of the past few quarters, we have began to see a little bit of recovery and improvement with their business, sequentially, year over year. And I think also part of that is owed to the fact that the prior founder of SourceFire has become the lead or the head of Cisco's security division. So I think he's bringing a new blood, a new DNA, and at least in the near term, it appears to be working. All about people.
When I look at the M&A landscape, I kind of break it in half. You have some big, very visible acquisitions that we're talking about, and that definitely, is a barometer, for what's happening in the industry. And then you have what I would call, transformative M&A, where a company has an acquisition strategy to transform itself. So an example would be BlackBerry. Most of you are familiar with BlackBerry. A lot of people still think of BlackBerry as a handset maker, right? And a handset maker who didn't do too well, and it was a catastrophic fall from grace. And some people might just think the company's dead at this point. But if you follow the market carefully, it would be hard for you to not call BlackBerry a cybersecurity company. I do. They've acquired 4 companies. They've reorganized their branding. Their messaging is exclusively around cybersecurity. They're releasing an Android phone. They have a multi-platform strategy around securing phones, not selling phones. And they've acquired 4 companies in the past year, only one of whom might be, considered, say, a household name, in VC circles, good technology. The rest of them were kind of niche players, interesting companies, and BlackBerry has transformed. So I think we're going to see other companies getting into cyber and transforming their company, not just, the IBMs and the Ciscos who are building, their business units. Because if you look at IBM right now, although they've had the growth I outlined, they're running at about 2.5% of the company's total revenues, meaning their security business. And it would actually be about 1.5% if you measured it against their revenues last year. Their revenues are obviously declining, so cloud and security and some things are starting to make up a bigger percentage of that. And the same thing would hold true of Cisco. They're a hot player. They've had some M&A activity in the security space, but again, they run at about 2% of the company's total revenues.
So looking at one more question along the M&A lines, are there certain types of solutions that are more desirable to acquire kind of in this current marketplace? What are you seeing that's hot?
Yeah, I think people still want things that are non-disruptive essentially right now. So things that you acquire and they don't necessarily shake up your entire business. Things that you can tuck in and then almost immediately upsell. So I think, CASI's been a big one. You saw Blue Coat last year overpay for 2. You saw them overpay for Prospectus and Elastica, but still kind of push into that market. You saw Palo Alto underpay for a Zero Secure asset, which was smart. It's become a good growth asset. And I think you'll see a lot more of that in the cloud security space because these are fairly easy tuck-ins. They extend your reach. Keep in mind that, a lot of security, we still talk about the notion of the perimeter, which is almost silly, in fact, because the idea of the perimeter is such a dated concept, but yet we're still talking about perimeter network security. You have to extend that. You have to move beyond that framework, especially if you're a legacy network security vendor. The great thing about being a firewall place, everybody's got a firewall, so you're always going to have some sort of a business, but you also see the writing on the wall, that the wall is sort of, it's a lot more porous than perhaps it was 5, 6, 7 years ago. So you have to find a way to extend your reach beyond the wall. So I think you're going to see a lot of consolidation, a lot of M&A happening in the cloud security space. But it doesn't just mean having a cloud security solution, it means having a relatively complete solution. That's not so easy to do. So you can say you have a CASB solution, but it doesn't mean you have a good one. And so I think you're gonna find a lot more scrutiny as well in how people evaluate the companies in the space.
I wanted to shift a little bit to the IPO market.
Sure.
Because that's something that's been quieter. We did see the first tech and first cybersecurity IPO of the year about a week or so ago. Based on sort of what you saw in the run-up to that and what we've seen in the last week, I'm curious what your assessment is of the IPO market and how people should be thinking about it.
Yeah, so we're involved in SecureWorks. I don't know how much exactly I'm permitted to say. Maybe I'll pass it to Shaul first.
Probably, yeah. I would say probably even before touching on the IPO, I think kind of it's also important to understand, just to provide some background. We're having a conference about cybersecurity, but when we think about some of the publicly traded entities that were mentioned here, the Checkpoint, a Palo Alto, a FireEye, an Imperva, CyberArk, some of these names, I think it's important to understand that at the end of the day, the aggregated market cap of those 15, 16 related companies, and I mean pure play related companies. So we don't treat Cisco as a pure play, we don't treat Juniper in that respect, but those 15, 16 companies represent an aggregated market cap of nothing more than 45 to 50 billion. That's the extent of it. So this entire category is like one pharmaceutical company. That's about it. And again, generating plenty of noise and excitement, by the way, and rightly so, I may add. So I think what we're seeing also, without a doubt, there's from a bird's eye view, a supply and demand issue. In other words, those of you that are coming from the investment from the buy side, without a doubt, there's a need to have some exposure to the security theme. At the same time, we don't have too many assets to work with and trade. We have a Checkpoint and we have a Palo Alto, which is 10 billion and above, and maybe a Symantec, but that's the extent of it. And I might be, forgetting it. And then you got yourself this kind of list of mid-cap and small-cap names. So then you got restrictions on what you can trade if you're a large cap, as an example. So I think now back to the initial IPO comment here, it also comes in cycle, in a way reflective of, markets jitteries or not. We would say that, there's going to be, a handful of IPOs that are in the process of being brewed right now. As Gore indicated, Secure just, completed their offerings, I think last week, just before, I think like 10 days ago. We got involved with Mimecast late last year. But again, these are small IPOs. Again, market caps, around 500 million or so. Again, we'll see when this one starts trading. But again, just bear in mind, we have a little bit of supply and demand issue here for the next couple of years.
I would say, what I can say on SecureWorks is that investor scrutiny right now in the public markets is quite high. And SecureWorks is, when you look at the gross margin profile, is certainly lower because it is a managed service. So it's going to be closer to 50%, trending towards the mid-50s, but still, traditional software margins, you're talking 70 to 80%. That's being heavily scrutinized, as well as the path to profitability. So what investors want right now is less growth and really more free cash flow, more profitability, or at least an understanding of the path to profitability. And if you don't have that, the notion of kind of coming out on EV to revs like Rapid7 did last year, there's just simply no appetite for that right now. What you will find, though, with the IPO market, to paint a nicer light, is there are companies out there that have run their business either free cash flow neutral or on the path to free cash flow. They're growing at a very nice clip that you will see come out later next year or late this year. The ones I can think of, Forescout, just raised it over $1 billion valuation, doing it about 120 million in bookings, growing at a very nice clip. They'll come out later this year, and they'll play against that orchestration theme we talked about earlier. After that, Octus talked about it's an Andreessen company, but we'll see. And then actually interesting, Alert Logic later next year probably comes out, and that's a hybrid managed service software model. And I think to that point, actually, managed service gets a bad rep in the space. I think you're going to find that it evolves over time. So people realize that managed services are very, very sticky, and you can actually make a lot of money selling them. So you'll find that evolving more as people sort of look at it a bit differently. And I think Mandiant sort of helped pave the way for that. But there are companies coming down the pipe. I think you're seeing a different threshold here in security software than perhaps you saw in SaaS or other sectors a few years back. Right now, it's companies that are $100 million plus in revenue, not $40 million plus. I think that's a good thing too, because what you want is to be able to operate cleanly for 2 years and not sort of have to bank your expectations on certain assumptions that may or may not happen.
SecureWorks was founded in 2002. They went public in 2016. Sophos went public. When did they go public last year? Do you remember what month?
It was back the beginning of, I think around,
September, August?
Just before the summer. I think,
Yeah.
Right. So that's another company. 20 years. They went public. I don't think we're going to wait 20 years. I don't think we're going to wait 5 years. But there's a lot of new money in cyber. We've seen companies in the past 2 to 3 years in the 100 million, 150 million, $200 million range. It's just going to take these companies a little while to have the construct of an IPO. But I believe that it's going to come. I think we have an inventory of companies, but these companies need to perform. They need to become IPO candidates. Raising $100 million doesn't make you a candidate. Using that money, executing in the market, hiring the right people, 3 years, 4 years, 5 years down the line, then you might start to see, an IPO candidate emerge.
And by the way, consolidation is going to help that. We talk about this being a $100 billion plus market, but there are over 1,000 vendors in this space, a lot of them extremely well funded, and a lot of them yelling over each other. And that creates a lot of noise. I think as that noise level dies down and you see certain companies emerge more than others, so in Endpoint, for example, you've got Cylance and CrowdStrike and Bit9, Carbon Black to a certain degree, Malwarebytes to a certain degree. But you're seeing companies sort of start to crest above that noise level as, one, the funding environment gets more difficult, and as people start talking more about consolidation, and as people get more spend appropriate, I would say, that's going to create an opportunity for certain vendors to crest above and get the chance to actually go public, because they'll be a lot more visible than they may have been last year, where everybody's sort of hyper visible, but also very aggressive in their rhetoric.
I want to offer at least a couple questions from the audience. So does anyone have any?
You've spoken a lot about technology companies, and I just wonder if you have any insights or research on the market for incident response, because that's a field that is very human dependent, less so technology, but it's critical and becoming increasingly visible.
I would say that, on the incident response, without a doubt, and we touched on it, we touched on FireEye and without a doubt, in the Mandiant context, these guys, without a doubt, has established themselves as one of the, if not, the leading force within this category. The way we look at it is, in a way, 1-800, come and save my life. The guys that will get, the first phone. So, yeah, I think definitely a market that geared slightly more from a consulting/services. We might be seeing some, maybe some productization of that down the road. But without a doubt, a segment that could be seeing and is seeing some increased interest. And I think also, if you build on that, then you also get to the analytics that could come on top of that.
I think the IR space is fascinating, by the way. I think you look at Mandiant, it's certainly a $160 million, $170 million business just for IR. But what you're also finding is a lot of growth in the EDR space, which is a segment of the endpoint space. And that's sort of, I see, as a function of IR, but sort of enabling people to do IR themselves in a lot of ways. So if you look at Malwarebytes, for example, it's a $100 million plus business. A lot of that growth is actually coming from the EDR space. Cybereason in Boston, an Israeli company as well, growing really, really nicely off of EDR. And EDR, I think what you're going to find with guys like CrowdStrike and others, sort of works alongside traditional incident response in a mechanism that allows you to sort of approach it in a hybrid approach. You can outsource it. You can also do it internally. And I think it's going to be a fast evolving space. I think also just one more point on IR, you will find resellers looking to get more strategic. Optiv is a great example of that. And they will look to, I think, both the MSSP market and the IR space as well as a mechanism to actually grow their revenue stream and become more important to their customer base.
Great. Maybe one more question. Yes, sir.
Yes, over here, sorry.
Oh.
I just wanted to ask about trends that you've noticed in the emerging markets, the BRICS, with regards to demand, interesting players that are growing, companies, investments in the emerging markets, India, China, Latin America.
I'll put it this way. If we go back to the discussion about the market growth and the market opportunity, and we try and maybe dive in a little bit into it, Probably we are seeing, that's from a bird's eye view, we're seeing more growth coming in China without a doubt, fastest grower in that respect. They have some catch up to do also from an infrastructure perspective, so security comes on top of that. We're seeing China, we're seeing in Latin America, as well as in some emerging market economies in Asia, in Asia, I think also Asia Pacific. So this is, by the way, countries that are growing their security double digits, anywhere between low teens to even high teens, depending on the category in question. Now, with respect to, I think one other probably thing to keep in mind is that those countries are slightly more sensitive to foreign exchange and its various impacts and devaluation. I think actually we've seen that over the course of the past few quarters, impacting a little bit the companies that Guru and I cover, those with higher exposure to emerging markets economies. As it relates to companies, as it relates to technologies, actually, Mimecast is a U.S. publicly traded company with a focus on email security. It is a company that was established and started its history back in South Africa. And then came to the UK and more recently to the US. Israel, without a doubt, you mentioned that. I'm not going to repeat that. I think the second largest exporter, of security technologies. I think some countries with a strong military tradition, you could see some good correlation between the military and the commercial markets.
Some of the industry figures that you ask about are really hard to find. There's not a lot of reporting, but you could backdoor your way into it through cybercrime. So as an example, in Brazil, very interesting company, the number one economic crime is cyber. On average, countries across the world, that would be about the number 4 economic crime. They're the biggest spender in Latin America. They make up about 80% of the Latin America market for cyber because they're dealing with that cybercrime.
We had one more question, and we'll do a quick question, quick answer, and then we'll wrap it up.
You've covered the ideal futuristic vision of the market. Are you seeing any shrinkage on the startup side, or is it steady?
So it's a good question. I think there's still a bit of a naivety on the part of the startups to take about 6 months to catch up to what the public markets are sort of indicating. But you are seeing, I think, a slowdown in VCs looking to expose themselves to more security. They're being more selective in what they're willing to fund. I mean, last year, if you had a security bent, you'd probably get funded. I mean, with very little rhyme or reason. But I think Bromium's a great example of this. Bromium's a company that's growing at 100% year on year in the endpoint space that was valued at about $500 million, a year and a half ago, was losing money, had to go back to the markets to raise capital, and now got cut in half, but still growing at a very fast clip. So you're seeing more scrutiny, but also a more nuanced understanding of what they're actually willing to fund. So what people want right now is, can you scale your business? Are you on a path to free cash flow? And more importantly, do you fit within the broader cybersecurity theme that we're seeing evolve out there? That's a very important point. So you're going to see more haves and have-nots. ForceGat's a great example. Raised $80 million from Wellington at $1 billion plus. Malwarebytes raised $50 million from Fidelity. So certain people are doing better, some people are doing worse. There's a lot more scrutiny. I think if you're a young startup, though, the times are a bit more difficult. Valuations are certainly coming down. The notion of getting 7-8 times revenue is sort of out the door. It's just a tough funding environment right now.
Terrific. Well, thank you so much. Thank you, panel, for a great discussion.
Thank you.